Good morning. Hopefully, folks, got the audio fixed today. But better still, hopefully, wherever you are, you're all awesome and well for a thankful Thursday. Thursday, 16th of September. Welcome, folks, to another Wealth Coffee Chat. Good to see a bunch of you guys jumping on right now. Fantastic to see the regulars returning. James, Allison, DJ, Nick, Facebook user. You're in there somewhere. You must be in one of the groups. Morning, Jimmy. Morning. How are you today? Good to see you jumping on there. And I checked all my tech this morning, so we should run smoothly. Fingers crossed. If anyone who's joining us for the first time, bit of a shout out to you. Thanks for joining. Jason Witten's my name. Good morning to you. And this is Wealth Coffee Chats. I've been property investing over 20 years myself and helping property investors over 18 since 2003, matter of fact. We've been coaching, supporting, encouraging property investors to build property portfolios across Australia and New Zealand since 2003. And we've got a bit of a catch cry around here. Buy well, never sell. This thing's a marathon, not a sprint. And that's the theme of my chat today. So stick with me, folks. I'll share a little bit of this stuff because when it comes down to it, when we get all the nuts and bolts done in the world of property investing, get our heads around understanding, acronyms, LVR, LMI, CGT, the world of property and the world of tax, they all like to have these acronyms and shorten things. When we get our heads around things like land tax and stamp duty and returns and all these important machinations of owning real estate, well, folks, it does come down to a head game, a mind game. And the title of my conversation today is How did this happen? How did a property investor in the middle of arguably Australia's best boom for over, call it 10 years, lose $36,000? The challenge is, team, people are unreliable. And what do I mean by that? Like, let me put this in context for all of us right now, because when we start out this thing, what happens, and you may have seen this with Sam's stuff. We all start out quite excited. We're all keen as mustard. And, we are at a certain point, and, this is kind of the emotional roller coaster often a lot of investors go on. This is the early stages. We kind of our eyes are open. We're a little bit intrigued or interested. We take some action, and, we're feeling some euphoria at the top of this mountain because we've purchased a property, and the first time we've purchased a property, maybe as an investment, the first time in our life. And that's pretty cool. Like, that's something not to be sneezed at. You guys know this one. About 6% of the Australian population own one or more investment properties. So, you've gone from, the masses per se, and that's not being a negative. You've got the masses economically, and now you're in the top, you're in the top 5%. The top 5% team of people who are looking at changing their economic circumstances. And the challenge, team, happens when you do something different that you're maybe not used to, maybe not ready for emotionally. And let's talk about that today, because it's like a bit of a touchy-feely conversation today. So stick with me, because this is pretty important. Because let me tell you the story right now of what's happened for this conversation today. Got an investor and one of our mentoring clients, actually. They purchased a property in 2018 down in Melbourne. Very nice townhouse. Absolutely fantastic townhouse, matter of fact. Bought it very nicely for a nice price in comparison to today's prices. 2018. Now, 2018, some things kicked off, or started to settle in. APRA, a little bit of uncertainty politically, et cetera, et cetera. And their life, this investor's life, had some stresses and pressures. And they got out of touch with their coach and their community of property investors. They faded away from their community of support, rationality, and they ended up in another place, taking advice, listening to the media, and very sadly being conditioned with fear and ignorance by a local real estate agent. Okay? This is the story. And we hear this, folks, listen to me, we hear this all the time. When you pull away from a good source of support and sensibility when it comes to real estate and long-term investing, you end up listening to people. Now, this is the most important thing. When you listen to people who have limited emotional, mental, and financial vision, they are going to poison, corrupt, disrupt your future wealth, okay? And we talk about this all the time, team, the 6-star team, all right? 6-star team. Tell me in the chat, team, right now, 6-star team, who are they? Who are the people that you need to listen to when it comes to your 6-star team? To go the distance, team, this is going to be a 30-year gig minimum. You guys know the drill. Minimum 15-year gig over this 20-year period, let's say, minimum 20-year period, if we have a bit of a look at it. We need 6 key people. 6 key people. You guys know the drill. Number 1, you need your coach and mentor. Now, your coach and mentor is the person who helps you manage this collection of professional, licensed implementers of certain things that you need for real estate investing. Now, I'll quickly run through these. One is your finance expert, okay, the person who helps you with your finance activity. The next one is your acquisition / property person to help you connect with the lenders, right? Or connect with the right real estate, okay? Brendan, you're onto it. Nick's onto it. Accountant, financial planner, advisor, coach. Can't remember all the 6? Well, I'll give you a little refresher this morning, all right? The acquisitions or property manager. 4th, a property acquisition person. 4th is your property manager team, okay? Now, those four right there are the most essential in the beginning parts, the acquisition part of your portfolio, okay? 5th, your accountant, and 6th, a financial planner, FP, okay? Now, those 6 people are absolutely essential to be on the same page with your long-term goal, LTG, putting a little acronym in there myself, team. Long-term goals in play, okay? Alison nailed it. She's all over it. Fantastic. Gold star indeed, Nick. So just think about this, team. I want you guys to have this question in your mind. Now, I'll circle back around to this investor, okay? This investor, sadly, lost track and lost touch with people who were all on the same page with his long-term goals in mind. Long-term goals in mind. So instead of coming back to his coach or mentor or his acquisition property person or asking the right property manager about his property. He asked a local real estate agent. Now tell me, team, tell me right now in the chat, put this down, put it in there. A local real estate agent who's never met you before, doesn't know about your long-term goals, dreams, aspirations. What's the only goal that they have in their role, in their job? When you call up a local real estate agent and go, hey, what do you reckon about this property? Should I keep it? Should I keep this property? Tell me about the market there. All right. What do they say? What do they say? Do they say, yeah, no problem, Jace, what do you got? Tell me about your long-term goals and aspiration. Tell me about the passive income you are looking to make in 20 years' time. Do they say that? Do they say come in and let's put a plan together, an acquisition plan together? No, they want to get you out of your property. You're dead right. Sell, Laura, Hardick, all over it. Teresa, their job, and let's not hold this against them, by the way. That is what their job is. That's their role. The dysfunction, the problem, was the property investor asking a local real estate has no connection, zero connection, zero to your long-term goals. And this is often the dysfunction. This is why this person lost $36,000. And literally 12 months after they sold this property, I think it's like 16 months now, the property is up $110,000. Up. So if we add it all together, they've probably lost $150,000. And then some every year it's going to grow. The challenge, team, is we, in this long-term journey, must get control of our mental and emotional state. Because I can tell you right now, when the machinations, the mechanics of what we do, 1 + 1 is going to equal 2, and if you add in depreciation, actually it equals 2.5. You buy a good property that someone wants to live in and aspirational and et cetera, et cetera. Like, it takes some time to get our heads around those things, team. Right? It takes some time. And yes, it can be bloody terrifying owning real estate and being a bit stressed about money and stuff like that. That is absolutely real. Now, but we've got to check in on these things, all right? We've got to check in on our beliefs around our money and at building our property portfolio, team. Because right now, unfortunately, sadly, many property investors start out on this journey and they run into a challenge with the thinking, is it a long-term, positive, patient, is that the right way? No, it's not the right way, isn't it? Patient. It's the wrong patient. The person in the hospital. Anyway, I don't know how to spell patient right now. But you get my picture. Is it a long-term view? Is your thinking long-term? Is it positive? You understand the difference between normal and abnormal problems. A normal problem, team, is your rent goes down $20. That's a normal problem. And a normal problem is your rent goes up a year later or 2 years later, $20. A normal problem is, especially on settlement day, there's 15 properties settling. There's 15 different valuations, all ranging from $20,000 less to $20,000 over the purchase price. That's normal. That is not abnormal. I've done over 7,000 property deals, team. My team, if I include New Zealand, it's close to 9,000. And I'm not kidding you. 9,000 property deals. The local real estate agent has probably done 10, maybe maximum 50. And then the thinking is to go and rely on the feedback if this property is in a normal or abnormal pattern of, volatility in a marketplace from someone who has very limited experience and absolutely detached and uninterested in your long-term goals. Yeah, a bit feisty this morning, Michelle. But team, I think this one, for this message for me, all of the positive messages that we communicate often, because real estate, once you get the hang of it, is repeat. So, and Alison said, yeah, unexpected repairs are a problem. And Alison, we know that that's actually a normal problem. And that's why we have the buffer in place, right? Because we know we don't control the future. We know unexpected things will happen. And on average, if you have $5,000 to $10,000 per property as a buffer, and your property is structured well with finance and its cash flow, it will replenish its own safety buffer so you can always be unstressed about those normal problems. An abnormal problem, team, an abnormal problem was COVID, right? That was an abnormal problem. What happened in COVID for us all is the lenders, the banks, went thumbs up. No problem, we'll give you all a mortgage holiday. A lot of people, team, ended up with more cash in their bank account than they did before. There is always a way through even abnormal problems. So we've got to be careful on how we think, because that then influences, obviously, what actions we take, how we behave. The person thought negatively about their property. They then wanted to blame someone. Oh, this thing's rubbish, whatever. That influenced how they behaved. They consumed fear and ignorance, and they decided that they'd have to sell before they lose their shirt. They lose everything, because the local real estate agent team, they train local agents to do this. Oh, you're an investor. Oh, mate, the market's rubbish. This is probably the best it's ever will get, right? You should sell now or you'll never get a price like this ever again, right? Like, that's the training. And sadly, the results in your life become reality because of how you thought at the first place, and it reinforces the belief you have. How you think. I think badly about the property. I think badly about investing. I think badly about my team because I didn't take advantage of these things, but I'm playing below the line. I'm looking to blame. I'm looking to be a victim. Then that mindset, that emotional, mental mindset, dictates how you behave. You sell because you think you've been done wrong. You end up with a loss, and that now reinforces your beliefs about the whole process, okay? So anyway, a little bit, like Michelle said, a little bit of a feisty one today, maybe a little bit off center of my regular conversation. And it's interesting, and maybe it's just a Thursday, maybe people are busy today, but it's interesting. There are less people on this live today than there has been in quite a while. Isn't that interesting? Isn't it interesting when you think about it? Everyone wants to hear about the excited things. Everyone wants to hear about, capital growth goes up. Everyone wants to hear about how do you do a little trick? How do you minimize capital gains tax? How do you pay your home off sooner? There's always people in there gunning for that one. But they don't want to stay around. They don't want to come and have a listen to a conversation that sometimes might be uncomfortable. If you want to go the distance, team, you need to get control of that victim mentality, that below the line, that fear and ignorance consumption that will hold you back. Anyway, there you go. A little bit of a somber one today. But listen, hopefully that lands. It comes from a good place. I want you guys to go the distance. I really care that you take the next 15 years to 20 years to build a property portfolio, team, okay, as we go out there. So there you go. Well, thanks for the shout-outs in the chat, team. Really appreciate that. And Christina, I think you've nailed it absolutely spot on. You need to stay the course. There's going to be storms. There's going to be bumps. Sometimes it'll be a bit lonely, team. Sometimes it feels like, is this ever bloody going to happen? Are you kidding me? And then all of a sudden, there's smooth sailing, or at least better sailing, clean air, a better road, whatever it is. And that's what the team is here for. That's what your team is here for, team. That's what it's all about. That's why having a 6-star team, some coaches, some support, a community helps us all go the distance as we get along there. And Danny's right. You've got to crunch some numbers, look at facts. Don't get swayed when it comes to the emotionality, and hold fast on this one. All right. All right, team. That's it. 8:30. I know many of you have got stuff to do. So awesome to hang out. Thanks for joining me today. Join me again tomorrow, one more time before the weekend, for another catch up on a Friday. You guys be good, and we'll chat soon again. Till we do, take care. Bye for now.